Hi, good morning, everybody. Thank you so much, all the three brothers, for inviting me. My name is Wagner Nolasco. I'm the founder of Build to Rent Direct. We only do new construction. We've been in business for almost 19 years in the construction industry here in Florida. And we do about 650 units every year. We have already forecasted close to 3,000 doors to be delivered into the market in the next 3.5 years. So thank you very much, guys, for inviting me. And I'll be more than glad to share anything you guys want from me.
Awesome. No, we really did enjoy meeting you in Belize a few weeks ago. It was a great event, but you just gave us so much value, so we knew we had to get you on the show. We appreciate your time. I'd love to jump right in and kind of get more information about how you got started in real estate, what you were doing before that, and kind of just walk us through that journey.
Yeah, thank you so much. So basically, I'm from Brazil originally, and in 1991, my father was a bank executive. During a bank robbery, he actually got shot 5 times. He survived, thank God, but my family moved to the US in 1993. So almost 28 years ago that I came here. I've been in Florida for over 25 years now. And I've been in development and construction for almost 19 years. So I have done over $700 million worth of projects successfully delivered. We have done hospitality projects, commercial, townhomes, single family homes. But how did I get into the investment side? So I am addicted to real estate investing. And I started investing and I really, really loved it. I went through the crash of 08, 09. I lost a lot of money, made some money back, bought some inventory, and we started doing turnkey properties, which is flips. So I did over 400 flips, and I didn't like it as much as a product for me to keep it as my inventory. So, the purchasing cost of the flips of the properties on the auction or the deeds starting to be really pricey. So it didn't make any more sense for you to continue to do turnkey properties or flips. And we went back into the new construction because that's always has been our core business. So we start buying lots in very specific areas that we believe that were really, really nice. We usually go for economical drivers in a local area. So for example, Palm Bay, we have SpaceX, we have Blue Origin, you have Lockheed Martin, very, very big companies that are there. We went to Ocala. You have Ocala Regional Medical Center. Actually, my wife is a physician and she did her residency there. They are the only level one trauma center. So we talked about, technology, of course, government contracts, but also healthcare is something we look for in the areas we invest. We also love distribution. So where Amazon is located, Chewy, the pet food supply company, Napa Auto Parts, FedEx hubs, we really believe in logistics. We really believe in healthcare and absolutely technology. So we go and buy a lot in areas that are very, very affluent and upcoming for companies to move into because, your property is only as good as your tenant, right? Especially when you talk about investment. So I acquired over 50 properties. I am actually reaching close to 60 right now. I have 5 more under construction for myself. I'm an investor, so I eat from my own cooking. I always buy where we sell, which is really, really important. And I have close to 3,000 units coming off the ground right now in the next 3.5 years. I've been working with a lot of the providers that you guys know for a long time. And I also co-own a company that's called the Realty Doctors. So that company is 42 years old. The founder of the company is Gene Gillen, which is an amazing person, my partner on it. And we have consistently delivered about 650 units every year for investors only. For over 22 years, we've been working with investors on the real estate side, and I've been involved on the construction side for almost 19. So we have over $500 million worth of inventory coming off the ground right now in different stages of construction.
No, that's awesome. Yeah, you touched on a lot there, but I know that your main brand now, if I'm not mistaken, is Build to Rent Direct. I can see it in the background, but for the people in our audience that can't see it, do you mind kind of describing what that is and how that looks, from point A to point B or C and all the way up until the point where you guys are looking for the exit strategy, if that is the case?
So I have learned so much from you guys actually because you guys are doing syndication at such a young age. So I created Build to Rent Direct. Our website is www.b2rdirect.com. And basically, we are a one-stop source for investors. So if you wanted to buy multiple properties, medium to large size investors, 5, 10, 20 units, 100 units, what we do is we structure a portfolio for you. We built a portfolio. We already own the land. So we structure the construction loan. I just had Camilo Saab here doing a podcast with us today from Apollo Equity Capital. He has $1.4 billion worth of capital that he's deploying right now. And what we're doing is we're actually custom building those homes with the tenant in mind. So we build and we patent a process that's called tenant resilient housing. So everything we build, it has tile floors or waterproof vinyl, granite countertops, LED lighting, blinds. So we actually commercial or professional water heaters. So we actually invest in the construction of the house so we can have a more durable product than the market is currently offering. And tenants just love new. Our tenants usually stay in the house for about 4 to 5 years, and that's really good because retention is really important as far as your cash flow and your capital expenditure as well for remodeling. So we are a one-stop source for new construction properties, single-family homes, townhomes, duplexes, quads. And we do the property management in-house as well. So we do construction, sales, property management, and we're just getting started into the syndication. We're going to be doing our own syndications. We're going to be supplying product for a lot of syndicators that we know. And I just have to congratulate you guys. I mean, I wish I was at that age that you guys are right now, being so aggressive and so knowledgeable about the market, really having great mentors that served you. So thank you very much for having the opportunity to talk to your listeners and your team here. And Build to Rent Direct is my dream, which is a direct source of product, brand new product directly to the investors. And a lot of the syndicators now are saying, well, I go from deal to deal. I look for deals. I always have to find the next best deal. I have the deals. We can custom create the deals as large or as small as we need to. 10, 20 single family homes for a syndicator or 100, 400 units. I have 413 units coming off the ground now. We're just starting to break ground and doing the clearing of the land and the underground. It's called Bena. It's 413 single family homes. So we have a lot of projects here, and I would love you guys to come here to Florida to visit our offices and our construction site.
That would be awesome. We would love that, and I appreciate that as well. You mentioned that you work with investors. I would love to know a little bit more about what kind of investor you work with. I think you mentioned it at dinner, and you had some pretty interesting investors you've worked with. So I'd love if you could dig into that.
So I'm a co-founder of a development company here in Central Florida. And even without knowing that we're doing a syndication, one of the partners originally, his name is Donis, almost as your last name, Donis. And he played for the Brazilian national team as a goalie, as a soccer goalie. He played for Liverpool in England. He played for Rome in Italy. So very, very successful guy. He retired as a professional soccer player. And before we know, we have a lot of influx from a lot of successful sports people coming in. So today we have investors from, the technology guy that lives in Silicon Valley that is making $500 to $1 million a year and wants to reinvest their money and build cash flow properties. And we have the big professional people, especially sports people, that says, okay, I'm going to make a lot of money in a very short amount of time. And how do I reinvest? Once I stop, all my sponsorship usually goes away. But, what happens after that? How can I make a living? So, they are building equity. Florida is a big equity state. So you're building equity. We have a lot of cash flow, positive cash flow. And, we're for business. We're pro-business here. We have no state income tax. We have number one in the country in migration state. And, people get to that. So people are moving to Florida. Over 1,000 people a day are moving into Central Florida just because of the weather. No state income tax, very business friendly. Property taxes are very low compared to taxes in some other good states that are to invest. So I think we're just at the right place at the right time, really. And investors notice that, right? And once they buy one property from you or 10 properties from you and you build a relationship, our investors tend to buy multiple property from us. Real estate is a local and it's a very close relationship business, right? People don't get that. You can't buy houses from the internet, but the big investors or the medium investors, you build relationship for life. You really do.
Most definitely.
Yeah. That's so cool. And I do remember, you speaking about that at the dinner table in Belize. But, within real estate, of course, we know that there's different sectors. There's multifamily, single family, development on both sides. So do you mind kind of touching on why you chose development instead of actually buying like assets that are already developed?
Well, do you see any deals hanging out there say I'm a great deal, come and buy me? They're not available, right? I mean, usually the great deals are usually off market. Usually you got to be introduced to them by somebody. And that's why, everybody keeps saying, oh, that's an amazing deal that I found. Well, if you found something that it's amazing, you probably have to add a lot of value to it. So you have to do a value add to the property, or you have to incur risk. You have to incur debt. To make that happen. So there's always risk and reward. I really believe that. I am a believer on a new property. I don't like to have remodel properties on my personal portfolio. That's why I don't sell them anymore. I believe new construction is the way of the future. You can save up to 80% on insurance by buying a new construction property. And that's why I like appreciation. I do not invest in anything that doesn't have equity built in, that doesn't positive cash flow, and it doesn't give me a tax break. So those are the three things I look for. And to be honest with you, I like the flexibility of customizing my portfolio. If I want to have 10 single family homes and 5 quads into one portfolio to one investor, I can do that. If I want to have 10 townhomes or 5 single family homes, so I do have the mentality of a multifamily purchase, but I can customize the portfolio much easier and more flexible. So I treat my portfolio as a commercial loan anyways. I have a commercial loan on all of my properties, and I have a carve-out clause, which I can actually take properties out, sell it if they're non-performing, replace them with a new one, and only have one mortgage to carry every month. So I do treat all of my portfolio, even though there are single families, townhomes, quads, as a multifamily purchase in a commercial loan.
Yeah, that's great. And for the B2R Direct, I assume that you guys are selling these to individual consumers. Is that correct? Or...
Yes, not consumers, so only investors. We don't work with homeowners. Okay. We don't work with anybody off the market. We just work exclusively for investors. So if you're not an investor, if you don't want to rent your property or actually buy a portfolio that is going to generate cash flow, we're not going to be the supplier or the source for you.
Gotcha. So do you leave it up to those individual investors to execute whatever business plan they have in mind, or are you guys also in charge of that as well, and they're pretty much just investing and leaving it up to you guys?
Over 99% of our clients are out of state, so we actually hold their hand from day one. We customize their portfolio. If they have a 1031 exchange, we try to accommodate that. We really work with a lot of the big 1031 exchange coordinators. We customize a portfolio based upon your needs. So if you want more equity because you're very young and you're building up yourself, just as you, or if you're older that you have to put a bigger down payment and have more cash flow available to you. So we focus on the client. The client is the center of everything we do. And we customize the portfolio. We introduce you to insurance agents so you can buy your insurance. Licensed inspectors by the state of Florida are introduced by us. We actually do 3 lenders. We give you 3 lenders that can actually do your loans for you as well. We handle the closing. We actually get you the inspection report at the end. So we make sure you don't have to do anything other than place your capital into an escrow account. We'll build your house. We'll get you closed with your preferred lender. We don't make any money from them. They just work with investors, so we refer them. But you're more than welcome to use whomever you want. But we do have customized solutions for individual investors as well that are looking to acquire multiple properties.
Yeah, that's so cool that you, of course, work with your investors and you're very flexible to kind of get the product right for what their needs are and, kind of accommodate for whatever their situation may be. But of course, we all lived through COVID. I know that you've been through several downturns, but I think COVID was a little interesting in the fact that the prices of materials skyrocketed. And I know that somewhat had an impact on development. So I'm just curious on what you've seen as far as your development and how did you kind of pivot to kind of mitigate that risk as far as rising prices?
So that's a great question. So because we build so much at once, we buy it in bulk. Everything we buy it in bulk. So if we buy refrigerators, we're buying packages for 10 or 20 homes at a time. If we're buying vinyl floors, we're importing containers loads. So we have a warehouse that actually distributes all the material to our job sites. So we were able to absorb a lot of that cost initially when COVID hit. But as you all know, lumber went up 400%. So that actually affected almost $36,000 on a single family home cost. So there's no way for you to prevent that. And you can go through the biggest recessions in your life. This is unpredictable, right? But what are we doing? our builders that we have 9 builders that build exclusively for us. Even though I'm a builder developer, I can't take care of all the areas. So we have 9 builders, they exclusively build for us. We have an in-house architectural and engineering team that we set the plans, what actually rents best in each one of the markets. We acquire the materials for them in bulk, so they're always saving money. But after COVID, what has changed is we learned how to communicate better with our suppliers. We're buying materials sooner so we can guarantee best prices. For example, trusses right now, we're taking almost 14 weeks to be delivered to a house. Sometimes we buy the trusses before we actually start clearing the lot, which is weird, right? So the cash exposure for a builder and a developer now is much earlier on. So we're spending more money early to get the materials that we have. And every contract that every builder now that I know or every developer does has an escalation clause, which is measured by the national indexes of construction. So if lumber goes up, that gets readjusted into the price. The good news for all the investors out there is all of our builders, they make a set margin per house. So for example, they don't try to bring that house to fair market value. And I'll give you a perfect example. Ocala, we're selling a 3-bedroom, 2-bathroom, 2-car garage block construction for about 195,000. This house today is appraising for 209. But if the buyer is locking in the contract today, he's going to get it for 195. Unless the market goes wild and we have to readjust the cost only, which is measured by index, he will close at the set price of 195, even though if the property is appraising for 230, 240 in 8 months from now.
That's great, and I know that Florida's a great market. We always loved going there for the beaches. But I'm just curious, what submarkets have you had the most luck in and success in Florida?
That's a great question. So Orlando doesn't cash flow anymore. I have one project in Orlando, which is called Sela. It's a 16-unit multifamily apartment building that I'm actually keeping for myself and for my team. But everything else we go is either Palm Bay, which is right on the Space Coast. We look for the big corridor. So the I-95 corridor is the one that connects Miami all the way up to New York. We also have the Bright Line, which is Richard Branson, the owner of Virgin, is building a private railway that is going to connect the Orlando International Airport to Port Canaveral, which is the second largest passenger port in the world, all the way down to Miami. So what takes us about 4 hours to drive, it's probably going to take us an hour and a half in the train to get there. So I go to the areas where technology is actually growing, companies are moving in, a lot of healthcare. And absolutely, we work with government as well. So a lot of defense companies are moving in and distribution. So we don't go over 55 minutes from Orlando. That's our main core. But we go to Ocala, for example, which has the largest retirement community in the U.S., which is the Villages. We build a lot of homes there for firefighters, teachers, police officers, people that work on the retail industry for the Villages, because you got to have 55 or over to live there. So we actually look for Deltona, which is about 30 minutes from downtown Orlando. Brand new hospital there, Halifax Medical Center. We have 56 acres there that is next door to an Amazon distribution center, 1.2 million square feet. So we look for economical drivers in the area. That for us is more important than anything else, is the jobs. What quality jobs you have in an area, right? You got to have a great property management team to make sure you have good tenants. We use all 3 credit reporting agencies to measure the tenants as well. And that's really important because, if you don't have a good property management, if you don't have a good team, you're not going to succeed. We also look for quality of tenants, right? So if you go to an area that you have a lot of houses that are empty, but you have a lot of tenants in demand, that's a good thing for us because new construction always attracts a better quality of tenants. I'm telling you right now, if your wife or if your girlfriend, whomever you're living with, goes to one of our houses, the first thing they look is the kitchen. They love the stainless steel appliances. They love to see what we have as far as the vinyl floors or tile floors. They love to see what we have on the master of the double sinks. That by itself sells the property. And once a tenant takes a first shower, they cook their first meal in a brand new house, they have the sense of ownership. So they take better care of the property. But our radius is about 50 to 55 minutes from Orlando itself.
Yeah, that's awesome. We're looking at, the reason I think he asked was because we're looking at Jacksonville. Or have you guys done anything near that area?
I have not. I know builders that do really well in Jacksonville, but it's an area that is a little bit too north for us, and we don't have anything in that area. But I have heard great things. I never invested into Jacksonville. I have a great friend that has a building construction company there. He does really well. He has beautiful product, but I just don't know enough about the market.
Yeah, definitely. Well, I'd love to kind of go into our express round. I'll pretty much just ask you a few questions, and you can tie it towards business life or personal life. But I have a feeling like I want to give you enough time to answer all questions. So, to go ahead and get started, what is the biggest mistake that you've made in real estate, and what did it teach you?
The biggest mistake is I invested a lot of capital in 08, 09, and I thought the market never had a bottom. So sustainability on the market is really important. You got to look at the market closely on a daily basis, on a weekly basis. What's happening to the interest rate, especially for us in real estate, it's a true measurement of what's going to happen in the market, right? We're now in the 40, 50-year lows as far as interest rates. We have a lack of inventory. So the biggest mistakes I made in real estate that I have learned is watch what's going on in the market, right? Right now, we have 7.8 million homes in need in America for entry-level homes, which is what we build. We serve the base of the pyramid. If you have more inventory than demand, you shouldn't be building. I learned that. If you actually can buy cheaper than what you can build is always a great buy if the area is good. And focus on the jobs, focus on the tenants. How can you make a product that is better than anybody else? So what I have learned is before I used to put the minimum into a house just to make it nice and habitable. Now I invest above and beyond what I would expect to have it on a house for myself. And that actually reflects as far as your quality. That becomes your business card, your signature. But one of the advice that I have for everybody that I made a mistake, I didn't watch the market closely in 08, 09. I think you guys should watch the market on a weekly basis, watch the interest rates, how much inventory is available or in lack of. And I think you're going to be able to respond much better to the market if you watch it closely and respect it.
Yeah, no, I love that. And do you have a favorite book that you would recommend for our audience to read?
I'm going to say what everybody usually says. Rich Dad Poor Dad is really the Bible if you wanted to get started in real estate. I love the new books from Ken McElroy, but I would say if one book is what you're asking, I love the Bible. But other than that, I love Rich Dad Poor Dad. I think if you haven't read that, I think you should. Cash Flow Quadrant for Albert Kiyosaki as well is a great book. I think we actually were involved in a case study for one of his books, which actually brings a lot of light into life, having that person in front of you. So Rich Dad Poor Dad definitely is the first book I would read. Cash Flow Quadrant is definitely the second one.
Awesome. In regards to advice, I know you've already given a lot of great advice, but if you had one piece of advice that you could give someone that's looking to get started, what would you say to them?
I'm going to say that you have to use your gut and your heart in a lot of cases. Look at the numbers, do your due diligence, make sure your property that you are buying or the area that you invest in cash flows or appreciates, whatever actually your minimum may be. But invest with your heart. Work with people that you like, that you trust, that you're building long-term relationships, because real estate is a long-term relationship play. If you're in just for the long run, you're going to be very successful. If you're in for the short run, you're not going to be successful. So pick your friends, pick your partners very closely, and actually, share your love, share your heart, do the things you love, and you're going to attract people with the same interest. Don't try to be something you're not, especially in this business. The word travels around very quickly. Long-term relationships, believe in the people you work with, build strong teams. It doesn't matter if they're employees, if they're partners, if they're associates, if people you do business with. Team is definitely something that you're going to carry along for your whole life. So don't do what you don't like. If real estate doesn't rock your boat, if you don't want to get up in the morning and get it done, don't do it. You got to love what you do. First place, take care of your health and take care of your family. It's the second advice I have. I know you didn't ask, but family is everything for me. I have 3 girls. I have a wife. Take care of your family, take care of your health, take care of your team. Make sure my team, for example, I pay for a gym for everybody to go to the gym. If they go or not, I really don't know, but I give them the opportunity. So invest in the people you love, take care of the people you love, and build long-term relationships.
Yeah, no, that's awesome. I love to hear that you pay for them to go to the gym. I'd love for someone to pay my gym. I'm just kidding. Fourth question. Do you have like a a daily habit that you would accredit some of your success to? You said that, I assume that you go to the gym if you're making other people go. So did you have like a habit that has, you've seen that as you would accredit some of the success that you've had so far?
First thing I do in the morning when I open my eyes, I usually pray. That's the first thing I do. And I thank God for one more day that I'm alive, right? I have my family well. So that's my first thing. And I think your state of mind, it's really important. So I start my day with prayer. I have my routine. So I wanted to make sure I return all my calls. Discipline in this business is success, right? You got to make sure you analyze your deals. You got to make sure you reply to your emails. You got to make sure you schedule returning your calls. But most important is I rely very heavily and I trust in my team. I invest every day. If I have a word of motivation to share with them or new goals to set it up, for example, 2021, we measure our goals on a weekly basis. And the premium that I'm going to give to all of my employees if we reach that goal is 1 week in Cancun with their partners. So, I motivate my team. I motivate myself with my team. They motivate me. But the most important thing that I think a very successful person always does, and I'm not putting myself in the category, is you got to look for the driver. What makes you happy? What actually makes your heart beat? I love real estate. I'm addicted to it. I'm not afraid to say. I love every morning looking for the next deal, for the next area, for the discount that I'm looking for materials for my builders to invest in. You got to have discipline. You got to look at your numbers every day. Make contact with your clients and your team, and just do what you like, because if not, you're not going to be successful. Another thing that I wanted to share everything is, it's good to be a hunter and to hunt for the deals, but it's better to be the hunted. If you do everything right, people will come to you. Good deals will come to you. I don't look for deals anymore. A lot of the deals that we close now, even for land, they come to us because they know we pay on time. We pay all of our contractors on a weekly basis. So do whatever you feel that, how you would be treated. But the most important thing that I would say to you is believe in your heart. Don't work for the money, guys. I'm telling you, the money will come. First thing you got to do, and that's how I created my financial freedom, is in 2016, I semi-retired. And just for the record here, retirement sucks. I couldn't stay retired. It's not for me. But having the financial freedom that I have every day, the not having to come to work to pay my bills is awesome. So do not work for the money. Make your money work for you and other people's money to work for you. That's what I would probably say, that if you do everything right and you love what you do, you're going to be successful.
No, that's awesome. Yeah, a lot of great advice. And I would love for you to share with our audience, and if there's anyone out there that wants to get in touch with you and learn more about what you do, what is the best way for them to do that?
Go to our website, www.b2rdirect.com. Like us in Facebook. Mine is Wagner Nolasco, or you can go to B2R Direct. Facebook, Instagram. We have a YouTube channel as well that you guys are already invited to participate with us. And I can share my cell phone too, 305-684-2222. Send me a text. If I cannot answer, my assistant is going to get back with you guys, but I'm always available. If you schedule a quick call, I'm always available to all of the listeners, all of your followers, to give them a piece of advice. Time is the most valuable thing we have. So, whatever you guys need, you guys really changed my life in Belize. And I just want to say this for the record. Seeing 3 brothers that are motivated by success and by helping their mom to succeed really motivated me. So you guys, what you're doing may not be a big deal for you, but believe it or not, you guys are changing a lot of perspectives in other people's lives. So it's really important that you work with your heart. You do everything that you have to do with your heart. And I'm very proud to be your friend, guys. And you guys motivated me every day. So it was a pleasure meeting you again. And the invitation is set. You're going to be on my podcast, hopefully next, and my YouTube video as well.
Thank you so much, Wagner. We appreciate it.
Thank you. No problem at all.